Hey everybody, good morning. It's Pete. Welcome to Stocks for Breakfast. Today is Monday, March 23rd, 2020. First thing I want to say is I hope everybody had a safe weekend. I know that the news over the weekend with Corona just started to get bad. There's really no other way to put it, but that is actually going to be the focus of today's episode of Stocks for Breakfast, where whether or not this massively bad news impacts today's trading, because if you are kind of new to trading, um, quite often news that seems to be extreme and should make stocks move in one direction or the other, sometimes it doesn't, because the impact of that news is what's called already priced in, and we might be seeing that a little bit today. So the biggest things I'm getting in emails that I just absolutely love is you guys are and girls are telling me that you're starting to think more like a trader as opposed to somebody who is uh, believing that if they see a chart signal, it's supposed to work. Trading doesn't work that way. Life doesn't work that way. If you are smart, you will understand that it's our job to set up probabilities and then do what we're definitely supposed to do. So the way I teach that in my coaching program is I say we're supposed to set up what's probably going to happen next, but know what we're definitely going to do. And that probably part is super important if you want to have a lasting, long, profitable career as a trader, whether it's a day trader, a swing trader, longer term position trader. It's imperative that you know your job is to set up probabilities, build that argument, as I call it, and then let the market do whatever it's going to do. If we happen to get a head start on a trade, great. We'll look to build if the situation calls for it. So today, the theme of today, what I want to have in your mind going into the market, if the market does not react negatively from where it is now, and we'll get into what that means in a second. If it doesn't react negatively from where it is now, and reverses, don't get caught looking at one side of the street, only looking to the short side. Because, and I'm not saying, here's the thing, I'm not saying it's definitely going to happen. I am saying that the situation has lined up where there's a potential that the bad news that we had this weekend has been priced in, and we might get a reversal if we open lower. So let's see what happens. But before I get to that, I want to touch on two things super quick because I want to get into the charts. The first one is trade safely if you're a new trader. And what I mean by that is because the average true range, because the VIX has expanded so dramatically, the swings are much wider. It's a little bit more chaotic. You probably have to be on lower time frames to determine which trend you should be trading. And by the way, I'm getting some amazing, amazing emails from you about making money just using the simple 1 to 2 day indicators, which I've been strongly suggesting in this tape because I've been through this before. The longer term picture is not as relevant right now. Throw the moving average, long-term moving averages out the window. They don't matter right now. We are trading immediate price action, dumping shares, buying shares, accumulating shares. So I'm really excited. Some people writing in saying that they've made more in one day using some of the short-term techniques than they've made in the previous 2 months, which is so exciting to me. That's my passion, to help all the stuff that I did wrong when I first started trading, helping you circumvent that. But my point I want to make here is if the market's too volatile for you now, and you're a new trader, or you're just a trader that doesn't, maybe you're not new, but you just haven't figured it out for yourself yet, step aside. If you don't step aside, cut your share size back dramatically and learn from this market. Get involved in the market if you want to, but do it in the right way while you're at this stage in your career. Lower your share size dramatically. Be super diligent in which stocks you pick. Only take your A-plus trades. Don't even bother with other trades that you think you can work, which, by the way, that should be the way you do it all the time, right? The second thing I want to talk about is if you've never owned a copy of this book, I'm trying to get it in the picture here, Think and Grow Rich by Napoleon Hill. This is actually the first copy of it that I bought. I bought this in the mid 80s, believe it or not. This is one of my most valued possessions, so much so that I actually bought the hardcover copy. My point is, as a trader, it's super common for us to go through these highs and lows and adversity where we could just drive ourselves batty. Think and Grow Rich is the number one book, period, in my opinion. It's affected my life more than I could possibly imagine. It's allowed me to believe I could walk through a brick wall. Hopefully, it can do the same for you. Pick up the book, $8 or whatever it happens to be. If you don't know the whole story, I'll probably do a video on it at some point. That's how much it's affected my life. But my point is this: if you're a trader, there's going to be up and downs regardless of the greatest conditions in the world or the toughest conditions in the world. And you need a system to learn how to deal with that adversity, come out the other side, and see everything as a learning lesson. As a matter of fact, in the book, he talks about every adversity contains the seed of a greater benefit. That's what Think and Grow Rich is about. Off of the soapbox today to help you with the mental aspect. Let's actually start getting into the charts right now. All right, so I'm going to share my screen, and we're going to jump into some immediate news. Oil turns positive, snapping back since worst week since 91. I know we're talking about trading stocks here, but I just want to show you the significance of where oil is now. So light sweet crude futures, this is the continuous contract. You can see that it actually started here in the 80s, this particular futures contract, but look at where we are now. The all-time low for this contract is in the $10 range, and we're closed at 22. One or two more big down days. Like on Friday, you can see it actually went down. Oh, it's closing much lower than that. These are the kind of trades that are lifetime trades or long-term trades. And again, it's not stocks, but what I'm pointing out to you right now is in your particular stocks, or if you want to start to look at something like this, these are positions that if they've never been down in these bottom 1/3 scenarios, whether it's your stock, whether it's futures, these are the kind of long-term trades, and I really wouldn't even call them trades. They're probably more like investments where you would start to work those positions in small pieces, looking to hold them for a much longer time frame. So just wanted to point that out. Now we're going to go into the ES futures. We're going to go to the June contract. And the reason I brought up what I said about the news today, and here is why. We actually let's go to the news first, actually. The news is here where European stock slump and the U.S. slumps after the Senate failed to pass the bill. That's the big news that I'm talking about, right? So when I talk about news and seeing how the market reacts, that's actually what I'm talking about right now. So we actually went limit down and we were halted again. And again, obviously, if you've been following the videos or Wall Street at all, halted means that it reached a limit and stopped trading for a period of time and then opened up again. We actually had that happen during the day, one day last week. Now, here's the interesting thing is we halted and did not trade lower. Now, granted, it's a pretty decent move down, but the interesting thing is it was not followed up by more selling. So what I'd be looking to do today, as I do every day, is I'd be looking for the significant levels that I'd need to be watching. And I get asked about this all the time. Do I trade pre-market? And the answer is no, I don't trade pre-market. And the reason for that, if you've never traded pre-market, is the volume, the liquidity is much, much different than it is during regular market hours. Not as many people are trading. Sure, you can hear the BS stories about how you should get in there and the moves are so much faster. Yeah, they're so much faster because nobody's trading. The speed between prices is just ridiculously fast, and you can't hit out, you can't get in at the price you want. You have to pay up or sell down. I don't recommend it for a new trader. If you're an experienced trader, you're on your own. I'm not telling you don't do it, but a new trader, you'll have your confidence shattered and you will have your bank account drained. That I could virtually promise you. I'm not going to guarantee it. I can virtually promise you. But what we do want to know for the pre-market stuff is what are the levels. And again, if you're a regular follower of Stocks for Breakfast, you know that I'm mostly concerned with what is the right price. What is the price where most of the price action traded? Not this one little blip and saying, oh my gosh, up there, that's the high. That's not the high. This is really what matters. It is the opening price and the low. And you can see we've actually traded within that 15-minute window. And again, if this was actually, this is a good example of a lesson, actually. I want to get to this. The first part is those are the levels. So we're basically looking at 22, 23. And on the lower side, 21, let's say 2172 in that area. That's the box that we need to get out of. Now, just looking at the headlines and the stimulus failing, you would think everybody and their grandmother is going to be coming in today and say, oh my gosh, I got to keep selling. And that could happen. However, I'm teaching you to be a trader, not just somebody who reads the charts. If this happens, then I'm doing this. If this happens, then I'm doing this. So what that means is we need to pay attention to, I want you to pretend now this is the opening 15-minute window. So even though we know it's 6:14 in the morning on Monday, pretend that that's the opening range. And you've heard me mention this quite a bit. And we've been mostly going off the opening price And a lot of people have been writing in about making money just off the opening price. And oh my gosh, let me tell you something. Once we finally pick a direction and we start having well bid, well offered, and we can start using the moving averages and adding order flow and all that stuff, and you have the opening price and the opening range, oh my gosh, you're going to have so much fun. But for right now, let's just talk about this and pretend that this is today's open. What we're talking about here now is if you have the opening range and price has not traded out of the opening range, there's nothing to do. Nothing. I can't express that enough. If you've read Reminiscences of a Stock Operator, if you've listened to some of the advice that Jesse Livermore has said, when price is doing nothing, you learn to keep those losses out of your account because you don't put those trades on in the first place, which means you need a reference point for what he calls when the line of least resistance gets broken and you start floating of trading in that direction. This is a perfect example of what happens when you trade and there's no bias. There's no obvious answer to who's in charge. So pay attention to that during the day today as well. Oh, my coffee's gone. So that being said, we're not going to only look at shorts today. And shorts, if you're new to the language, you need to pay attention to short selling means we're trading below these levels. Being long or buying means we're looking to be above the opening range. So again, I can't stress this enough. This is a really awesome chart to print out. Maybe I'll even put it in today's Smart Money Alerts, which, by the way, if you're not getting that, just click below. I'll leave a link for that. It comes out every morning. If this happens today, don't trade until you get out of this range. You're going to have your sanity back, and if and when we finally pick a direction outside of that opening range, you'll feel a lot more confident that now something's going on, which actually leads me to the next thing. And I'm going to go back out to the daily chart, and we're going to look at a few trades. These are some of the top signals that I'm going to be looking at today. The first one is Disney, and this is kind of related to what we just talked about in the opening range and not doing anything it gets out of the open range, because that means that nothing is new. Think about that. If you opened here and you don't get out of that, nothing's new. No new decisions have come in to say, let's buy more or sell more to get out of what right now is the right price. Daily inside candlesticks do the same thing, and they're one of my favorite patterns. So I'm going to rattle off some stocks right now that you can take a look at during the day and make your own list of stocks that had an inside day on Friday that have a decent amount of volume, a decent amount of average true range, which means on a daily basis you can expect some price action that you can trade. So Disney is one of them. Facebook is another one, and I'm going to get up to one that I think is going to be the most powerful one that I'm going to keep an eye on today. Lowe's is another one, LOW. TJ Maxx is another one, TJX. Google, probably a little bit of an expensive one. Alphabet, right? For that might be expensive for some people. Next one is Morgan Stanley, and that was actually, I'm gonna go through all of them. I'm gonna tell you why Morgan Stanley is one of the most exciting. Square is the last one as well. But going back to Morgan Stanley, now it's only a $29 stock. Does not really have that much massive volatility. But again, is everything I'm walking you through every single day. It's my job to set you up so that you can start to develop a strategy. You can start to look at these trades before the market opens, and don't worry about what all these other people are posting in chat rooms and all this other garbage. You're going into the day with your list. What I'm pointing out now, whether it's on a daily chart, a weekly chart, a 15-minute chart, or a 5-minute chart, it doesn't matter. That's an inside day. Now, what that means over here is right here. You have this candlestick, right? Then the next candlestick is inside that candlestick, and that candlestick is inside that candlestick. So you have an inside day. Inside days are powerful. When you get an inside day, learn to scan for those, because those are the biggest explosions. Because again, I've talked about this before, increased volatility leads to a contraction in volatility, leads to an increase in volatility. It just makes sense. Prices, that's really the only two price structures you really need to know. An expansion in volatility, which we know as trend or an order flow, and then a contraction in volatility where stocks pause to catch their breath, or you have accumulation or distribution where it's reversing. In this case here, we have a contraction in volatility. Yes, the order flow and the current momentum is straight down, as everything is right now, right? At least for the last 3 or 4 weeks. But more importantly, here's the key about an inside day. Generally speaking, it would be perfect if it broke out and broke down and went through in the same direction of the order flow. That doesn't always happen. In this case, you would love to see it break down, punch through, and have a perfect trend to the downside. Could happen, should happen, doesn't mean it definitely will. But what we do want to see is we want to see that you're prepared with the list of stocks I just gave you. and ready for a trend day. Here, and I'm going to come back to the screen, and we're actually going to talk about what that means. So the strategy for trading an inside day, never mind an inside day, which is 2 consolidation days, is you're looking for a day where you're going to get an expansion in volatility. That sounds fancy, but all that means is we're looking for a big red or a big green candle to happen that day. It doesn't matter what the longer term trend is, because this could break to the upside and have a big green candle to the upside. These types of trades are those trades that could make your week. So if we get a breakout, which it looks like we probably will, get a breakout to that, and let's just say for argument's sake we break to the upside, again, the trend doesn't matter as much here. It's one of those trades where you need the mental fortitude to say, I'm going to hold this trade to the day, because it's a one-day situation where the buyers or sellers come back, and you should be able to hold the trade into the close. So you're not going to trade every wiggle and jiggle and get in and out on every single one. I'm using really fancy words today. And hold it, because that one trade should close at either the high or the low, and you'll have an awesome start to your week. So here's the key though. Inside day candlesticks, never mind inside day, are a strategy in and of itself. It's a one-day play. One day. I want you to be very clear on that, because I'm going to get emails later where people say, well, should I trade it again tomorrow? Only if it's another inside day. But if it breaks out, that's it. It's a one-day play. Now, sometimes, especially like in this case here, where the inside day is pretty small, sometimes you could take out one side and then reverse. If that happens, the stop loss is if it trades right back into yesterday's trading range, then you have to take your loss, be a mature trader and say, didn't follow through, no big deal, but don't leave the stock. If it bounces back and starts to trade through the other direction, you have one side caught on the wrong side, and now new buyers come up. If somebody could push it through the bottom and come all the way back up to the other side, that means something's going on in that stock, so pay attention to it. I just rattled off 1, 2, 3, 4, 5, 6, 7, 8, 7 stocks that had inside days. So even if you don't trade them today, but Morgan Stanley's a little less volatile, maybe you can take a look at that one, depending on your risk and that kind of stuff. Monitor them today. Monitor them and see how they trade, so you can add this to your toolbox. Okay, very important. Finally, I just want to go to the screen and just talk about 2 things really quick. I did a scan this morning. Again, I don't get paid for this, just something that I use every day, the free version. We did a scan of stocks that meet the criteria that closed positive on Monday. So again, we're looking for relative strength plays if the market should happen to turn around today, that are above the 50-period moving average, have our normal average true range, so it has opportunity, and average 2 million shares per day, so it has liquidity. And we actually came up with a list of 7 stocks. I normally don't trade any of these 7 stocks, but they met the criteria. So what you would then do is you'd go down a little further and see if any of them actually look good to trade. And I would say right now, out of all of the stocks on this list, really none of them except maybe ZM. Zoom obviously is getting a lot of publicity right now for good reasons. I do it all day, literally every day. It is the Zoom and one other one, GoToMeeting, are literally the communication tool of choice right now, where there are just millions of people communicating on video right now who are being asked to work anything smartly from home. So keep an eye on Zoom today. We actually had a breakout, didn't close near the highs, but look at all these positive closes above the open in the face of the market just getting absolutely shellacked. So keeping an eye on the news today and its effect on price action. Pay attention to price action, not the news. Last, I want to leave with, I'm always asked about what some of the websites are that I pay attention to. This one called zerohedge.com is a really good one to pay attention to every day. Can be a little sensationalistic, but it's followed by a lot of people, myself included. So we're going to call it a video. Take a look at those stocks that we had. The biggest thing I want to talk about today is pay attention to price and not the news, because today has the potential where the Senate didn't pass the bill. We had a gap down, we had a halt, but now we're trading sideways. So use that chart of the 15-minute intraday pre-market candlestick to superimpose that on whatever stocks you're trading today. Pay attention to the opening range, which is, again, the terminology, make sure it's clear, the opening 15-minute candlestick, and make sure price is outside of that window before you start to place positions, because it can be relatively choppy until that happens. And don't be shocked if we open a little bit lower and turn around, because the news is not as important as how price reacts to that news. And I'm sure you've heard that 100 times before, but let's start to apply it as traders. That's the big thing. So I'm Pete Renzulli. Thank you so much for attending Stocks for Breakfast today. I will be doing some of these live coming up soon. And if you're on the email for Smart Money Alerts, you will see that. I will let you know. It will most likely be Monday mornings. I haven't decided the exact time yet or day. If you like these videos, please absolutely do me a favor. Click down to do two things. Number one is subscribe, and number two is to leave a comment if you have any questions or feedback about the videos. That would be awesome. Have a great day. Be disciplined and watch those inside days today. Take care, everybody.